Traders, if you viewed my if you viewed the thumbnail, I guess you now can get the picture of what I am about to talk about on this video, right? So I want to show you guys how US 30 Dow Jones Industrials has printed out one of the best and one of the simplest strategies. Well, let me not say strategy, let me just say one of the simplest price action data that you can capitalize on as a day trader, as a swing trader, or as a okay, we have day traders, we have swing traders, and we have scalpers and as a scalper, right? But before we get any further with the video, I hope you like the video, you subscribe to the channel, you share the video, you leave a comment, you click the link to sign up with the broker that I trade with and highly recommend. If you're looking to be part of the COT Academy team, we're having 3 exclusive mentorship services. You can choose which do you prefer and which do you want to work with, and let COT Academy do the rest from there. But without further ado, guys, I want to share with you guys how US30 printed out one of the simplest and one of the best trading price action data that you could have capitalized on as a forex trader. So on this video, I'm only going to be showing you guys how you're going to print out your descending channel, how to spot out your descending your declining support and your declining resistance, and how you can take those entries on your descending support and your descending resistance, right? So this is US30 on the hourly time frame, guys, right? I repeat. So when you clearly see a structure on US30, you can tell that the structure is somewhere in shape or form looking bearish. So from this highest point that US30 printed out, price came back and printed this low. So from this low, we then created this high. From this created this high. And from this high created what? Sorry, this lows. From this lows, we again printed out this highs. So many traders approach your bearish channel, or let me just say your descending channel, in a way that they wait for 2 or 3 touches on your declining resistance or your diagonal resistance before they can put their money to work. On opposite terms, traders capitalize or look for confirm a ascending channel or your bullish channel based on 2 or 3 touches on your inclining support, right? So when you can clearly see here, we had this first reaction right there, and then we had the second reaction, and then we had this third, and then we had this fourth, right? So once we had this fourth reaction, I was now comfortable. Oh, we now can clearly see that we are now more than comfortable to just mark out this resistance right there, this your diagonal resistance, and at the same time, we now are comfortable to mark out what our diagonal our diagonal support, right? Never mind me, guys. Why am I stuttering today? We've overcame so much today this morning to a point where I'm kind of feeling anxious, not in a bad way, but in a way that I just want to rest. But how can I rest when I got work to put in, right? So guys, now you can clearly see what's the purpose of this video. You can clearly see the simplest descending channel slash your bearish channel. So now that we've marked out our bearish channel, like I repeat, it's based on what? 1, 2, 3, 4. This is 4 touches, but traders base it on 2 or more touches, right? At the same time, your bearish channel, it's 1, 2, 3, right? 4. And that still confirms to you that you're having your channel, right? So when you now can clearly see that price has a bearish channel. Now that we understand that price is having a bearish channel, how can we now capitalize on this bearish channel? Because we can clearly see that price has printed out our descending channel slash bearish channel. But how can we capitalize when price is in a bearish channel? I'm gonna show you guys the secret. So it all starts here. So from the first touch, price has to drop to the downside. So from price dropping, this is our first support. You can clearly see that price pushed to the upside. So from price pushing to the upside, we created this high. So from this high, from this high and this low, we were looking forward for continuations to the upside, but we never got strong momentum because this high couldn't be higher than this previous higher high. Once this high couldn't violate this high, we now understand that once this high had momentum to violate our previous low, we now can get the picture that price is firstly in a downtrend or in a bearish structure. So from a bearish structure and a bearish channel, we now have to look forward for bearish behavior before we can look for bearish patterns, right? So we now look forward for our bearish behavior. So our bearish behavior starts way right here. Once we create this low and as price violates our low, we now can get the picture that price is in a bearish channel, because this low created this high. This high created this low. This low violated the previous low, right? With that being said, we now need to wait for what? We now need to wait for our price to create our lower high, because we now get the picture that price is in the beginning phases of our downtrend, right? So once this low was violated with this new low, and once this low created this new high, we simply now have to understand that in order for us to capitalize, we need to wait for price to fail to violate our channel right there. We need to wait for fail to violate our channel. And as you look at it right there, price, okay, let me do this, my bad about this one. So we need to wait for price to fail to violate our bearish channel. And once you look at it, when we come right there, price still had a fail. Price still violated to violate our channel. So once price couldn't violate our channel, right, we now can clearly understand that this was our first reaction. This is our second reaction. If price doesn't violate your support, your diagonal resistance, or your declining support, or your descending channel, or your bearish channel, whatever that you call it, once price doesn't violate, because this was our first reaction, this was our confirmation that price might be looking to be in a bearish structure and in a bearish behavior. But before we confirm, this high has to violate our current low. So once we had a violation of our current low, price created a new low. So with this new low, we created our current high. This current high couldn't violate our channel, couldn't violate the previous high. What happened from there? Price pushed to the downside, violating our low. So we do it from here. We take this one right there, right? Take this channel, and we come and put it right there. But even though I don't have to put it right there, I can still put it right here. But putting it right here, it was a bit risky because price didn't come back to our channel. So what do? We put it right there. So from putting it right here, before we come right here, we need to look at how our behavior was looking, right? Because now price created this high and tapped on our diagonal resistance and gave us a reaction, violating our low, creating a new low. So from price creating a new low, you can clearly see that price created a high. So from this high, price had pushed to the downside, violating our low. So from violating our low, price again pushed to the upside, creating our high. So from price creating this high, you can clearly see that price continued with a push to the downside, right? Violating our lows, right? Price had a continuation to the downside. Violating our lows, creating a new low. So from price creating this new low, we now get the picture that price is in a bearish channel, bearish structure, bearish behavior, right? So from price creating this new low and having a tap on our high, you can clearly see that this new low that price printed out created a new high. This high had a reaction on our diagonal resistance. So what do we do from there? Once price gives us this type of kinds of confirmations, we take this and we put it right there, right? This again is our reaction on our resistance. So we now can clearly see that, okay, price again had a reaction on our resistance, right? What happened from there? Price created a high, tapped on our resistance, and what happened? We pushed. So from this push, price did what? From there, violated our low, created a new low, and gave us a new high. So once we violated this low and created the new low, price came back over to our resistance, right? Price came back to our resistance, creating a high. So from price creating this new high, you can clearly see that with price creating this new high, again, we had a reaction right there. I can simply circle this out. I can simply do this just so I can accommodate you guys. So price again had another reaction. So from this reaction of our new high, price did what? Pushed to the downside, violating our price created this new high, violating our current low, creating a new low. So once price did the same thing, as obviously as we explained, you now can understand that, okay, price is in a bear structure, right? Price is in a structure, price is in a bear channel, and price is having bearish behavior, right? So once you have all those three aligned, your structure, your behavior, and your channel, the last thing that you need to look for is your patterns or your entry confirmations, right? So before we end, before I explain, we now have this breakout. So from price giving us this breakout of our channel, the only thing that we need to look for before we can confirm that price might be in a possible reversal, this high has to be violated because we broke out, right? And we had a retest. In order for us to confirm that price isn't obviously in a possible reversal of our violation of our channel, can we at least get the first break above of our previous lower high in order for us to confirm that price is looking obviously to be bearish, to be bullish, I mean. But if price has a breakout and doesn't violate your current high, then I guess you still need to look forward for continuations to the downside, but only if price breaks below your resistance and trades inside your channel. And when you look at it, price had this break above, price had this break below our resistance, and price had a retest, and price had what? A retest below our resistance. With that being said, we are more than comfortable to do it, to take this and put it right there and say this was our other reaction. So you now understand that, okay, we had over 1, 2, 3, 4, 5, 6. We had 6 entries that we could have capitalized on when trading US30. So let me show you guys how you could have took those trades. So the first trade is going to be right there. Once price hit this tap on our diagonal resistance, and once price trades below our channel, we have a reaction on our resistance, and you have a trade below our channel, then that's when you can do it. That's when you can comfortably take your trade based on this very same approach and look for your targets to be obviously on new lows, right? This was our first trade. So the second trade could have been the same thing, right? Once price gives us a tap and once price trades below the channel, then that's when you can do it. You can take your trade looking forward for new lows, right? Again, once price gives us a word, once price gives us a reaction and gives us a trade below our channel, then that's when we could have done what? Taken this trade. Again, once price trades below our channel, once price gives us a reaction on our channel and trades below our channel, then that's when we could have took this trade looking for possible new lows. Again, once price gave us a trade, once price gave us a reaction and a trade below our channel, then that's when we could have done what? That's when we could have capitalized like we had to. And the last one, once price gave us a word, a breakout and a break above, a breakout and a break below, and a retest above our resistance and a trade below our channel, then that's when we could have done what? That's when we could have took this trade and capitalized the way we had to capitalize. Same as this one right there, right? So guys, understand that your channel, your structure, your behavior, your channel, and your confirmations are 4 confluences that you can use in order for you to capitalize once price gives you a sign of a descending channel, a bearish channel, or once price is in a diagonal resistance and in a diagonal support, and that's when you can capitalize. But the key is, if price gives us a reaction on our diagonal resistance and trades below or inside our channel, that's when you can capitalize. If not, wait for confirmations. If not, wait for confirmation. But if price gives us a tap and a reaction and still trades below or inside our channel, then you still can be comfortable to take those executions. Do you guys get that? But without further ado, guys, I hope you take the knowledge, I hope you take it to account, and I hope you use it and capitalize with it, because this is free information, but it's only free and it's only valuable if you use this free information. If you're only taking it and just putting it in your bed bunker, then I guess it's just useless information. And with useless information, it's just stagnant knowledge. Stagnant knowledge, you dead. So I guess you get the memo and I guess you get the picture. But without further ado, this is your boy Harlem, King COT, and we're signing out.